Welcome to the Your Business on Purpose podcast, the ultimate resource for women business owners looking to confidently navigate their entrepreneurial journey while upholding their principles. I'm Dawnette Palmore, your host and fellow entrepreneur. Join me as we immerse ourselves in illuminating conversations with accomplished experts spanning various fields across the business spectrum. Together, we'll unearth strategic insights into seizing opportunities and ensuring that your business is equipped with the essential elements aligned with your purpose and values. Hello, everyone, and welcome back to another episode of Your Business on Purpose podcast. I am your host, Dawnette Palmore. So most small business owners who work so hard but wonder why there's never enough left over at the end of the month, it's not always because there aren't enough earnings, right? It's not because they're not making enough money. It's often because of hidden money leaks and slowly draining their profits, right? It's like a slow leak. Has anybody had a slow leak, like in maybe your tire or a gas leak? Right now, I actually do have a slow leak in my gas leak, which is being taken care of by the gas company. Or maybe even your water. You're like, why is my water bill going up? And then you find out there's been a very slow leak that has added up over time. But 82% of small businesses fail because of poor cash flow management. And I want to help change that. And that's why I am a fractional CFO. That is why I help businesses with their finances so that we can change the statistic. I'd like it to be zero. Small businesses fail. Zero. So let's work that way together. But today we're going to uncover the 5 biggest money leaks, I should say, I see in all the time working with my clients in small businesses. So I'll give you, and we'll also give you some fixes, right? Because we don't want to just talk about the problems. We also want to talk about how we can fix them so that we don't become the statistic of the 82% of small businesses that are failing because of cash flow management. So first of all, I want to say thank you so very much for being here with me today and just helping this podcast grow. We are an international podcast, which is so cool, being listened to in different countries all around the world, and just helping women with their finances in business to thrive and not just survive. I love doing it. It's my favorite thing. So what are the 5 biggest money leaks? Number 1. Unclear or poorly tracked expenses. Now, I've talked about this before, and I'll talk about it again and again because this is actually number 1. Not having clarity on what's going in and what's coming out of our businesses. And, sometimes we think, well, maybe, it's okay because I'm making money. But we're going to talk about, what happens when we're not paying attention. Okay, so first of all, this can also happen in your personal finances, which one time I had a client that had like over 30 subscriptions, like the subscription boxes and things like that. That adds up. Even if they're just $5 to $10 a piece, like that still adds up, and that's a big chunk of money. So with your business, I find that sometimes business owners are paying for subscriptions that they don't use, things like an app or a software or a membership. In fact, I'm getting ready to cancel a membership on my personal side because haven't used it in a while and I don't really see me using it soon. So and remember with these things, we can always reapply, we can always sign back up. But most of the time when I cancel stuff, I rarely, if ever, sign back up because you weren't using it and then you just figured, well, I wasn't using it. I guess I didn't really need it. Anyways, so that's one of the first things we want to do. We want to look at, are we paying for things that we're not using? Then not separating personal and business expenses. So this goes in part of unclear or poor tracking habits. When I just did a conference on all of this, a little business summit, I guess I should call it, about making sure that our personal or businesses are separated because one, it's going to give us clarity on our business, what it's really costing, what it's really making, but it's also going to give us clarity on our personal. It's also going to save us from an IRS tax audit if you are here in the States. Well, no, it's not going to save us, but it will make it much easier if we have those separated, if we get audited and they're being commingled, then the burden of proof becomes on the taxpayer and not the IRS. Um, so, what can we do? We can do monthly subscription audits, right? So, looking at, okay, also, people sign up for free trials and then we forget about them, right? And then it's like, dang, that's like a big chunk of money. I haven't even used it even during the free trial. Let's just get rid of it. So do monthly subscription audits. So go through, make sure, because sometimes they don't shut subscriptions off. I've actually been having a problem for over a year, and this is no hate towards Microsoft, but having a problem with the subscription with them. I cannot get it to shut off. I changed cards, all that stuff, and it wouldn't shut off. So sometimes that happens too. I've had to call my credit card company several times about it. It's been so frustrating. So we want to see if maybe we're not using the subscription anymore, if the free trial has ended and now we're being charged for it. And then if we did cancel and maybe it has not hit yet, or for whatever reason, like the whole issue I've had, it doesn't shut off. Okay, so number two is pricing that doesn't reflect true cost. Now, I did a whole podcast on this too, but I still want to touch on this again. So sometimes we undercharge due to fear or lack of confidence, um, which can leave a lot of money on the table, but there's a way that we could build that up, and I'll talk about that in a minute. Then we have forgetting to factor in our price, things like taxes, overhead, time. So we want to make sure when we're pricing something that, and this is why it's so important to be clear about what's coming in and going out of our accounts, because it's also going to tell us what our business costs to run. So we're not going to know about taxes if we don't even if we're unorganized in our finances. We need to have that clarity because really most of the time taxes are not on our mind, but we need to kind of get it back in the conversation because it's a reality, especially here in the United States. So um, whatever is true for your country, you want to make sure that you're factoring that into your price as well. And then, of course, do we have subscriptions or things that we have to purchase in order to make that sale happen or to service the client that's going to purchase something from us? We got to take all those things into account. Employees, all that stuff that all needs to be factored in. Rent, utilities, whatever it is. So, what can we do? Again, we can run a simple pricing audit, right? So what does it actually cost you to deliver the product or service? And that's going to take a little bit of work, but you can do it. And that's going to also give you an informed decision whether you need to raise your prices or not. So how can we build up confidence in our pricing? Well, one thing we could do is we could set a price, sell it, up the price, sell it, up the price. So, obviously we don't want to go from, or maybe you can, it's totally up to you, $100 product to $10,000 product. Now, maybe that product is worth $10,000. Maybe you're not comfortable asking 10,000, but you can't stay at 100. So I would say ask 500. And once you sell so many of those, products or packages or whatever it is, then you bump it up a little bit more so that you can start increasing your price to what you truly would like it to be priced at and what it's worth, right? Because we're talking about value here. So we want to add for profit. We want to add margin for profit, not just for survival. So we're not here just to pay our bills and get by, right? There's so much more to business than that. We can't. It doesn't make us greedy. We can't expand, we can't hire, we can't reinvest if we're not charging people money. Okay, number 3 is poor invoicing and collections. Now, I know this is one of the most uncomfortable things to do, right? To collect money from people, especially when they hadn't paid you like they should have. But I having clients not pay or pay late is a problem, and it happens often. And then business owners waiting weeks to send invoices. So we don't want to have somebody buy a product or a service and then wait for all these, give them all this stuff and then give them the invoice. Like, no, you want to get that invoice up front right away. Um, so something I have done, because I used to be guilty of that, and then I would give them service and then they wouldn't um, pay, and you're just like, this is weird, but they don't think it's weird. If they do, they didn't say anything and they didn't act different. But then it's harder to get them to pay once they've received the other end of it, right? So we want to make sure, thinking we're a business owner, you don't go in the grocery store and get food or even a restaurant. Well, actually, you do in a restaurant, but in the grocery store, you can't get the groceries unless you pay for it. And a restaurant, they're not going to let you leave unless you pay for the food, right? So we want to make sure that we are collecting the fees before we render services. And I've gotten really good at that. I don't even set our appointment unless the payment has been made. And I say that, hey, when you pay the next steps come once you make that initial payment, you'll get an email with the next steps. They don't get the next steps until they make their initial payment, and then it goes on auto pay. So we can also, okay, so how do we fix this, right? Automate our invoicing, right? Just as I have talked about in my examples. Set clear payment terms and then stick to them, because we have to have these boundaries, because we're people and we just, like to not we like to cross boundaries, I guess. So we got to set boundaries and then make sure that we hold people up to them, because that's part of holding people accountable. And that's okay. There's nothing wrong with that as long as we're not being mean about it, right? Um, and then some things you can do is if they pay early, they get a discount, but I don't always recommend discounts. But it is something you can do. Hey, if you pay this, like when you go to the gas station and there's a cash price and there's a card price. So they give you a cash price. So, hey, if you pay this in cash, you get this price. If you're going to pay it on card, you get this price. So you could do the same thing with your clients. If you pay on card, it's this price. Or if you pay early, it's this price. If you pay after this day, it's this price. Giving them a little incentive to pay you on time and early. People always like to get little discounts. Okay, number 4 is inefficient tax planning. Okay, so I see this a lot. And again, we covered this a little bit earlier in the podcast, but one, not saving for taxes throughout the year. That's number 1. And then 2 is missing deductions. So things like home office, mileage, meals, contractors. And this is what happens when we don't have clarity on our finances, right? So I see this a ton in the real estate industry, that they don't save for taxes. I've had multiple clients and they get this huge tax bill. And they're just like, what the heck? And then we have to, then you're also incurring late fees and penalties and interest and all that stuff. So it actually ends up costing us a lot more money than if we had just saved up throughout the year for our taxes. And then when we don't have clarity, we're missing deductions, right? We're not, and this also can be true if we don't have the right tax professional on our side, helping us to make sure that we don't miss these things. But also it's on the business owner to make sure that they're having, that their finances are, clear on what's going in and out. Like they're tracking it. They know what's happening. They're looking at their numbers and things like that. So, very easily we can miss things like a home office. Maybe we've been told we can't, but there is ways around it, or there is ways to do it. I don't want to say around it. There's rules and regulation by the IRS. And as long as you're within those rules and regulations, you're completely allowed to take the tax deduction. So one thing you could do in saving for taxes is opening a separate tax savings account. And, depending on where you're at, you put aside a percentage of your deposit that comes in, or every sale, or however you want to do it. But you set aside a percentage into a tax account so that you have it. You can also set up a payroll, which helps a ton. If you're paying yourself or you're making draws, you can set up payroll. Even if you just have one person, it's just you through a payroll company, and they'll take the taxes out. They'll pay them quarterly. They'll figure all that stuff out. It's fabulous. Um, so, number 5 is not paying yourself consistently. So owners I see dipping, and I was guilty of this as well, dipping in and out of the business account. Like, we're using it for our own personal spending account when it's really the business account and it's a separate entity than who we are, right? So also business owners aren't setting salaries. So it creates chaos and hidden leaks in both the personal and business finances, right? I remember, like just, oh, let's just move the money over. Okay, we need money for this, move it over. Oh, okay, we need money for that, move it to this account, that account. It gets very stressful and daunting to do that stuff. And of course, you spend a lot more money because you're not paying attention. You don't have clarity on your finances. So you definitely want to say, okay, I need to pay, or I need, or I can pay myself this much. And then you do it. And one, you're going to want to talk to your tax professional, and you're going to want to talk to a payroll company, because I highly recommend having a payroll company do all that stuff for you so you don't get into any trouble. So how can we fix that, right? Again, you have to decide what you're going to pay yourself each month and stick to it. Even if you start small, right? You can start small and you can gradually increase as your revenue increases. So that's what I have for you today. And, these 5 leaks seem small, but they can add up to potentially thousands of dollars over time. Especially taxes can rack up pretty quickly, right? So once you patch the leaks, you don't just stop losing money, right? You create this financial confidence to grow, to invest, and to pay yourself with peace of mind. I mean, that's what the biggest thing is, right? Having peace of mind. Oh, having clarity and peace of mind. So if you're tired of feeling like money's slipping through your fingers, book a clarity call with me. It's free. Let's find out where your leaks are at. Let's find out what's going on. Let's find out how to fix them so that you can make more money, you can keep more money, and you can make bigger impact, because that's what it's all about, right? Okay, well, thank you so much for listening. I appreciate you so much. And remember, conducting business on purpose not only fuels your success, but it also propels you towards a purposeful life. Thank you again for tuning in. And until next time, embrace your journey of intentional business and purposeful living. This podcast is dedicated to you and all the incredible women out there breaking chains, pushing through, and striving to make it all work. Your support truly means the world to me. Could you do me a favor? Be a gem and leave a review. It will help us reach even more women, making a bigger impact. Your feedback is invaluable, and I would genuinely appreciate it. Don't forget to hit that like button and subscribe, ensuring you never miss an episode. Until next week, live a purposeful life in both your business and your finances.